Good morning and welcome to Thursday, the Patriot Radio News Hour. Joe and Jason, I hope it finds you well out there. So many things to talk about today. We had yesterday's inflation number that we shared that was lower than expected. Then we had the Fed releasing not only their data, their Fed minutes. This was one of the meetings where they had the dot plots. And then, of course, the press conference followed that with Jay Powell. Then this morning we had jobless claims. We also had wholesale inflation numbers out. And it runs the gambit. We got a down market right now. We'll see where gold ends up. I'm not too sure that it's going to stay where it's at right now. As the dot plot, I don't know how important it is because it's never accurate, but it went from 3 rate cuts. Remember, we talked about it yesterday. One guy had 6, but most of them had 3. It was a split between 1 rate cut and 2 rate cuts, right? So that was where everybody was. And then Jay Powell came out. I thought he was as dovish could possibly be. But again, I think nobody really knows what to expect. And this is what we're seeing, at least so far here this morning. Our toll-free number, 800-951-0592. The website at allamericangold.com. And you can go out there. The lead article there will kind of explain, a little more detail as to what they were thinking out there. But again, the June dots, they're looking at 1 rate cut, 2 rate cuts. That's where everybody is. There are a few that have no rate cuts. So it was 4 for no, 7 for 1, 8 for 2 is kind of what we're looking at, Jason. And this has got the markets. I guess that's a little more hawkish, if you will, considering, remember the one in March, only 2 had no cuts. 2 had 1 rate cut. 5 had 2 rate cuts. 9 had 3 rate cuts. And, of course, 1 had 4. 1 actually had 6, right, in that March number. So I guess, yes, that definitely is a little more hawkish. It was almost kind of ridiculous where the dots were in the March meeting. But that was the hawkishness from the Fed yesterday.
Well, I guess they're going to have to look at more data before they make a decision. But, I think all their numbers, the numbers that you report on a daily basis, Joe, are pointing towards a rate cut, obviously. It's all just happening just at a perfect time before the elections and how, the Fed will be there to rescue whatever is going to happen. So I would say the only thing they need the Fed wants to, if they're going to do a rate cut, they're going to want to look good, right? They want to look like they have their Superman cape, and they're going to fly in and save the day. So whether that be some geopolitical situation where the markets start to go down, or if that's the markets just start to go down all on their own, we start to see wacky things going on with these middle-sized banks, and then they'll come in and save it. And they'll say, "Oh, we're going to lower the rates. We're going to fix this thing. We're such great economists that we're going to lower the rates, and that'll fix our problem." That's the only thing they need, because the numbers are lining up now, right? Whether the numbers are right or they're not right or whatever the numbers are, the appearance of the numbers and what's being reported shows that rate cuts are coming. And now it's you don't waste a rate cut. Especially if you could barely cut the rates because of the inflation. Don't waste it on just doing it because it's responsible. Make sure that there's somebody to save, a storyline, right? And that's all we have to wait for now.
That's it. It'll be a rate cut to save something because Jay Powell, once again, was not hawkish. It was almost like, hey, here's this little graph with a bunch of dots on it, but then I'm going to come out and be real dovish, right? So their projections aren't a plan, he said. So kind of like, well, you know, this dot plot stuff, you know, we do that for you guys, but that's not our plan. We're really focusing on inflation. We're assuming good but not great inflation numbers. They welcomed the numbers from yesterday, and they were hoping for more of that number. And, of course, way above what they were telling us. But definitely an interesting thing, because then Jay Powell started to question some of the numbers that have been coming out. In particular, he was saying that the jobs numbers that the Bureau of Labor Statistics have been producing may not be very accurate, Jason. That was kind of one of the big gotcha moments, that maybe the job market may be a lot cooler than what the government numbers have been saying.
You know, as if the Fed doesn't have any kind of influence on how those numbers are reported and what they are. I mean, come on. I mean, you said your wife just watched The Big Short here recently, Joe. There's the firm inside Mutual Omaha. I forget the character's name, but his group of guys that they're very bearish about the markets, and they go to the ratings. They go to ratings firms. How come you're giving AAA ratings to this stuff? And she's like, because we have to, because I'll go to our competition, right, Joe? Isn't that what this is all about? Oh, I suspect the numbers. Really, Jerome Powell? I'm pretty sure the Fed has something to do with those numbers.
When we get back, we also got jobless claims this morning. We're back here. Patriot Radio News Hour, Joe and Jason on this Thursday. A quick look in here. We've got the Dow down almost 300 points. The S&P is down 10. The Nasdaq's up 20. Again, man, Apple, NVIDIA, they're just really the stock market right now. The 10-year note, 428 on a 10-year note today. Crude oil's unchanged. Gold is lower, right? Gold is down about $15 right now, still holding above that $23 level. Silver is down as well right now, right back to that $29 level. So silver's really been, I think this is the fourth day now. It's either been up 75 cents to $1 or down 75 cents to $1 every single day this week, as everybody's trying to figure out how many rate cuts are there going to be. But we talk about diversity here all the time, and it's interesting when you have the Federal Reserve give the appearance that they're going to be tough or tougher, then the head of the Fed comes out and says the exact opposite, then starts actually openly questioning the data that we're all supposed to, we're supposed to make our financial decisions based on this data, and questioning the validity of the data itself. And then we're starting to talk about, is the jobs market getting ready to buckle? Now, that's kind of the big question here. First-time jobless claims, 242,000. That was much more than expected. They also revised last week's number up to 229. So there's definitely, the layoffs are definitely starting to pick up here. We're starting to get into that range. Are we going to see this continued pattern here? We're 250, 260. We probably shouldn't get too worried until we get a lot closer to that 270,000 to 300,000 number. But again, it does appear that things are starting to get a little dicey, and everyone's confused. No one knows what to do. That's when you got to get more diversified, because these are the signs that the bubble's getting ready here. And we don't know when. Is it going to be another 6 months? Can we get to the election? Can we get into 2025? Because as Jason and I have been saying all year this year's the year of chaos. We're really trying to get ready for what's going to happen in 2025. That's why I keep telling you, if you got $50,000 or more, check out our friends at Y-Refi, because you get great fixed rates of return up to 10.25%, and it's not correlated to the stock market. Nothing that would happen like today, Dow's down 300 points. So what? I got a great fixed rate of return going over at Y-Refi. Check them out. Invest. YRefi.com. That's the word invest, the letter Y. REFY.com, or just call them at 888-YREFI-24. But, Jason, that was kind of the big note here. A wholesale inflation. We got that data out today. It was actually down a couple of tenths. But when we look at the year-over-year number, still really high wholesale inflation. Then the jobs number came out much worse than expected at the 242,000, and then it goes back to Jay Powell yesterday saying there's an argument that payrolls may be a bit overstated. I don't know what a bit overstated means, but Jason, I think we're hearing Jay Powell say, hey, there's room to cut here because these jobs numbers aren't as good as what they're saying.
Well, yeah, I mean, the numbers got to be right for you to make a decision on it, right? And so, we always hear Powell saying, he's going to look at the data before he makes a decision, right? And so now he's questioning the data. And what is the actual – Joe, we sit here every day trying to figure out, why things haven't moved faster and moved beyond where they're at. Why is there just more money in the system? Why this and why that? And what I always determine when it comes to what you look around and see happening versus the number that they are giving you, and it doesn't really add up to what is actually happening. That's where I come in and just, I feel that it's being arranged, it's being dictated. Something is happening, something is being purposely done, and then there's a timing to it. 9/11, I think there was a reason it happened specifically on that day and that year and that time. There's reasons that these things happen. I mean, Joe, I was on the air, fortunately, during 2019. I had just started with you. I was 1 year in, and the markets were crashing. The markets were going to go belly up. It was bad. And just so conveniently, happily, here comes the COVID scare that just blew the whole world up. And then economically, all these things were done. Nobody cared because you had to go run and hide in your house from the disease that was going to kill everybody. So Joe, it sure seems like we're building up to something where the numbers that don't make sense, or the things that we're observing around us that don't make sense as far as what's happening around that. There's a lot of smoke and mirrors when it comes to the economy. There's a lot of, look, would the 8 years that Obama was president would have been as economically, I guess, smooth as it happened if the Fed hadn't secretly printed $29 trillion to put fingers in the dam? I think Obama's 8 years would have been a rocky 8 years. I think we would have had a depression that would have gone very badly. But what did they do? They secretly, and through a Freedom of Information Act, we figured out 10 years later, they didn't print $5 trillion to help the too big to fail banks. They gave money to all the big banks. They gave it to countries that were hemorrhaging. Everything that was dying because of borrowing money from, U.S. treasuries, it was dead. It was dead back then, Joe. It's more dead now, right? So, it's going to happen sometime, right, Joe? It's going to happen. Something major, and it sure seems like the way everything's lining up. The last 5 years, you just look at it. Just look at the last 5 years, which that's a long time. 5 years is a long time. It's not, but it also is. It's all heading for something. Ever since the economic collapse in 2008, it's heading for something, and we're looking right. If we looked at history and the markets fell apart in 1929 and the Depression really got going in 1933, there's your 5 years. And then what happened after that? the Depression got worse, and then World War II. I mean, doesn't that feel kind of like where we're headed, Joe?
You know, it's interesting. I'm just, and I'm sorry, I'm a little preoccupied, but big discussion now about Saudi Arabia ending the petrodollar agreement. Yeah. It is official now. I didn't want to say it until I knew for sure, but Saudi Arabia now has announced that they are going to be switching and joining the Bank of International Settlements. It's called the Enbridge payment system. And what does that mean? That means now Saudi Arabia can now accept other currencies instead of U.S. dollars for oil. Obviously, Saudis, they've already committed to joining BRICS, right? They're one of the newest members of the BRICS. We'll see what the effects are. But as Jason was talking about all of these things, you know, I'm starting to you know, think of it as a puzzle. And this is a big puzzle, right? This isn't, you know, a 500-piece puzzle, a 1,000-piece puzzle. You know, this is one of those super big 5,000-piece puzzles. And you've got to get all these pieces together to kind of figure out where things are going. Because yesterday, Citigroup came out and said, gold's going to be $3,000 an ounce in the next 12 months. And they went on to give all of these factors as to why this is going to happen. Obviously, mainly that, first off, gold is very, very comfortable above $2,000. Very, very comfortable above $2,200. They say that gold is going to be regularly testing all-time highs between now and the end of 2024 before surging to $3,000 in 2025. Negative U.S. growth. They say positive for gold. They keep talking about gold demand. And again, Jason, I got to believe that one of these pieces is, oh, by the way, Saudi Arabia is going to need less dollars, even though their currency is currently pegged to the dollar, leaving the petrodollar system that's been in place since like the 70s. Kind of a big deal now, because obviously they've been building these relationships with the BRICS. And I'm wondering, you know, we're trying to make some sweetheart deal with the Saudis and trying to throw the hey, you recognize Israel, we'll give you all this stuff. It really is a harbinger of things to come, Jason, because we've lost leverage here, that's for sure.
Well, and it kind of gives Saudi Arabia sort of a shield, you know. You have a buddy, and you've been doing business with your buddy, and you don't just go to your buddy and say, oh, you know, we're done doing business. You know, that creates a problem, right, Joe? Instead, you're just like, well, I got this other buddy, and you deal with him also. But so I'm going to deal with him. I'm still going to be dealing in your stuff, but it's going to be through him. Because the BIS, they deal in dollars. They deal with treasuries, you know. So it's kind of a soft drop of the petrodollar, because they still will be selling in some dollars to begin with, at least, right, Joe? They'll see, America, look, it's okay. I'll deal with the BIS. There's still dollars here, but it gives Saudi Arabia geopolitical cover for if they don't want to really yank dollars out fast, you know, Joe. So it's, you know, it's not a slap to the face of America, so to speak. It's kind of a soft way to say, you know, goodbye. We don't want to be stuck with this. We want to have more of a choice when things go weird, you know. And it's not a good sign for the world trade currency, the dollar. But the dollar's not going away. It's just being depowered day by day. And then
this is
we're going to be like all those other European nations where we're kind of not that important anymore.
Yeah, and I agree with that. I think this is going to be one of those slow burns, right? It's a slow burn. Saudi Arabia will do this gradually. And let's not forget, listen, they need dollars. it's not like they don't need dollars. They need dollars, but what they're going to do is the same thing that China and Russia and India, Brazil, all of these countries have been doing and doing it gradually. But this is kind of a big deal because this now, by setting up here at the Bank of Settlements, this now opens the door for them to take other currencies for the first time. Right now, before this move, the only way you could get oil from Saudi Arabia was to make a payment in dollars. So now the door is open. We'll keep an eye on it. Right on cue, then, Janet Yellen came out this morning talking about the debt and saying that, oh, no, it's okay. It's okay. But she threw some caveats. If the debt stabilizes where it is relative to the size of the U.S. economy, she believes we're in a reasonable place. That's an outright lie. There's nobody believes what we're paying and going in debt is reasonable. But okay, that's her spin on it. The way I look at it, she said, is that we should be looking at the real interest cost of the debt. That's really what the burden is. Duh. Yeah, you think? Wow, that's real brilliant. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. Some very interesting developments here today. Saudi Arabia ending officially the Petrodollar agreement, joining the Bank of International Settlements payment system. Now, again, are they going to stop taking dollars? No, of course not. But it's going to open the window. They're going to gradually start reducing the need. That's going to put more pressure, right, on these bond auctions. Immediately, Janet Yellen comes out on TV telling everybody, well, you know, if we can just stabilize this debt right here, then maybe we can be okay. But we got to focus in is the interest rate. That's the problem. And, of course, no, Janet, that wasn't the problem. The problem is that ever since you've been around, you've been telling the government to spend like crazy, adopting horrendous economic policies at your time at the Federal Reserve and now here at the Treasury where everybody's wondering what the hell you're doing. Why are you selling so many short-dated notes instead of we could have locked in a lot of this debt at super low rates. And now she's out, Jason, saying the interest on the debt is the big problem. And when we look at it right now, we've spent over $600 billion so far this year in interest. And remember what Bank of America said, that interest payments by the end of the year could be approaching $1.6 trillion. Already, we're spending more on interest payments than just about anything else. It's right up there now, past defense spending. If you separated Medicare and Medicaid into two programs, we spend more than those two programs. The only thing left, Jason, is Social Security, and we're gonna make a run at that as well. And I guess this is something where nobody, because I'd love to know, well, gosh, why did you tell us to go big and go super into debt during the COVID times, and now you're out here saying, well, it's okay, you know, if we can just stabilize it. By the way, what was she pushing? Oh, Joe Biden and his new budget proposal, huge tax increases, some, very few spending cuts because there's not a lot, unfortunately. You think about defense. Are we going to cut defense? No, it's wartime. Can't cut defense. Are you going to cut Medicare and Medicaid? No, matter of fact, Medicare and Medicaid, wait till you see the increase that's coming. The insurance companies are not happy. Are you going to cut Social Security? No. Jason, there's just not a lot to cut in this budget. And so now Janet Yellen's going on TV and trying to convince everybody, well, if we just pay some more taxes, it'll be okay.
Yeah, Medicaid and Medicare and Social Security, those are the same pretty much as income, wages. So when those things go up, it's just more money spent into the system, which means more inflation. And no, those things are going down, Joe. We know that it's pretty obvious the plan has been, since 2020 especially, to inflate their way out of the mess that they're in. Try to create a new system in which those at the bottom, as you said, raise taxes, and taxes will be raised. You're going to see your taxes come from all different sides, and this keeps the average working man running in that rat wheel. And if those who have assets, who own things, will be able to weather the storm of inflation a lot better, which is why we push gold and silver constantly, day after day after day. No, you don't have to be one of the wealthiest men in the world to do better during inflation, but man, you better have something besides a little bit of 401k savings or something sitting around, because the money sitting in your account is being devalued day by day by day by day, and you getting a wage increase which isn't going to keep up with the inflation is not going to cut it, right, Joe? You have to be involved in something that's going to protect you from this. And it's you really should listen to shows like ours and any shows that report the same types of things, because the inflation's not stopping here. It hasn't. Here's the thing: inflation's been a bad problem as far as I'm concerned my entire life. It got worse after the 2008 housing crash, when they decided, well, 2% is just dictated. 2% is a much bigger piece of the pie than you would think. Lots of men have gotten very wealthy off of 2%, right, Joe? And now we're looking at inflation. I think that's going to be 4 to 6% on their numbers, which is more like an 8 to 12%. I mean, can you imagine, Joe, if we actually computed the numbers in a normal fashion, we'd probably be looking at 6 to 10% actual inflation every month going on, or year over year. It's bad. This. How do you compete against that? That's 10% tax on top of the 25% income tax that you're paying, plus the 10% taxes you pay on consumer items, plus the property taxes and the auto taxes to get your plates. It just never ends, Joe. I mean, just the amount of taxes. They say that the lower income people, they don't pay any taxes. Well, go to the grocery store and see what happens. Try to have a car. By the way, when you're the lower income guy and you're renting an apartment, well, that guy that you're renting from pays property taxes. So nobody escapes taxes, Joe, and they're going to get a lot worse in the near future.
Let's just look at it, right? I mean, almost half the country, they're paycheck to paycheck. Over half the country doesn't even have $500 saved. A quarter of the people making over $75,000 a year spend 50% or more of that on housing, right? Because, I make $75,000, but I live in New York City, right? I make $75,000, but I live in California, right? And you're essentially, you're poor at that level. If you're making $75,000 a year and over half of your money's going to housing, you're poor, right? I mean, that's just what it is. The majority of people making $60,000 have difficulty even managing debt, right? This is what inflation has done. I go back, and I tell this story all the time. It was when I was like 22 years old. I got a job. I was making $42,000. I thought I was rich. I lived by myself. Right, I had my own place, my own car, on and on and on. Can you imagine? You're making $40,000 a year right now. You're wondering how long can I even afford to live? Am I going to get evicted? Am I going to be homeless? I mean, Jason, this is what's going on in America right now, and I don't care who you are out there. Those are the facts.
Agreed. It's exactly what's going on, Joe.
800-951-0592, Patriot Radio News Hour here on this Thursday. We got a down market right now, but very bullish setup here, especially when I'm looking at the data that came out today. Wholesale inflation down 0.2. Jobless claims spiking, right? So 242,000. That's by far the highest number this year. I'd have to look. It's got to be the highest number in close to a year on jobless claims. And then, of course, yesterday's inflation number, whether it's true or not, I mean, you know, I guess, I don't know. I mean, Jay Powell saying, hey, guys, I just want you to know during my press conference yesterday, yeah, those jobs numbers that come out, you know, like remember last Friday, 272,000 jobs? Yeah, that's probably overstated. Well, what are we talking about? How do you know? Right? Are you just saying that? Right? My guess is they know exactly what's going on. But either way, the setup here, especially when we're talking about what's going on in the gold and silver markets as far as supply, everyone talking about unable to replace mine production now in both the gold and the silver markets. We got big deficits, so we like it from, you know, I'll call that economics 101, right? The supply and demand situation. But then you throw in that I think if nothing else, Jason, right, things are slowing. They're slowing. And yet the rest of the world continues to move their chess pieces, continues to put these puzzle pieces, if you will, together to rely less on the United States and less on U.S. dollars, which means obviously what? They buy less treasuries. You get the drift. This is the same story we've been telling, and this is the reason think about it. Now you got the big banks all coming out, and they're always low. That's the thing. If Citi is saying 3,000, what is it really going to be? Right? Because they always set these numbers low. I mean, think about what they were all talking about this year. Some of the banks were telling you gold was going to go down this year in January. Right now, most of them were saying, okay, well, maybe 2,200. What was I telling you? Hey, we're going to see $2,500 gold. I even said we could see 3,000 if it gets really bad. And now, Jason, what are they all saying? 2,700 is like the lowest I've seen, and everybody's talking about $3,000 gold.
If South Koreans are emptying out vending machines and housewives are selling out Costco of gold and silver products, that's really a good indication of where gold and silver is going. When the housewives are buying it at Costco, Jody, we always knew this. When things get a little crazy, and we know just off the one event that we know is going to happen in November, it's an election, and the news is just drilling us with all this gloom and doom and guys and trials and all this craziness. How many housewives are going to go buy silver and gold at Costco with the election cycle? Just that story alone. You know, South Koreans selling out vending machines of these little gold cards that you could buy 1 gram. So some of this gold they're buying is less than a gram, but they're blowing out these vending machines. And that's just one country that's doing this. That's all the indication you need, Joe.
Starting to buy gold, which they've never done. Record demand for the Chinese citizenry, not to mention the central banks. Listen, today, the gold special today, take advantage of these low premiums. $10 Liberty. So these are the half ounce, $1,250 for a half ounce of gold today at 800-951-0592. If you buy 20 or more, $1,240. And Jason, this is something where the setup here, the information that's coming out this week, here's what we know for sure. We know that they need to cut rates. The question is, are they going to cut once? Are they going to cut twice? How many banks are going to go under? And then as Janet Yellen was talking about, are we going to be able to stabilize the U.S. national debt at these levels? Or is the situation, because we're on this path where we're seeing the debt levels, they're jumping by $500 billion a year, right? From where they were 2 years ago. Last year it was up $500 billion. Looks like this year we're going to be up another $500 billion. Jason, you can't keep doing that year after year after year.
No, and the $10 Lib special that you just announced is a real great way to get in. So when I first got into gold and silver, I was kind of just agnostic about what gold and silver to have. I was kind of. I didn't really mind. I was like, how cheap can I get it? Who can I get it from? The Patriot Radio News Hour is something I listen to. It's funny because way back years ago when I was listening to the show, it was still when gold and silver was racing like crazy, 2011, 2012, and you had gold and silver at these highs that they eventually came down from in 2013. But there was all these other radio shows. There was at least 2 or 3 others I was listening to, and it's selling different stuff. And all I know is that after a couple of years, the only radio show that was left as I was driving around serving papers or delivering pizzas was the Patriot Radio News Hour. And the more I started to get more sophisticated in understanding gold and silver, the old pre-33 gold, and the junk silver, the pre-65 silver, it just made a lot of sense. I'm not against it buying any gold or silver. If you can get something cheap, you can put away anything cheap, go for it. I mean, I used to rummage through pennies when I had less means to pull those copper pennies out, which are 3 pennies or 3 cents per copper cent now. But Patriot Radio News Hour, the Patriot Trading Group, this pre-33 gold, the $10 Liberty sale today, it's a good one to get into. I mean, there's not as many people buying as should be buying right now, right, Joe? Which means best time to buy.
Best time, that's when do you buy? When no one else is buying, right? That's exactly it. 800-951-0592. Jason and I, we're going to wrap it up right after. 800-951-0592, $10 Liberty gold pieces, 1866 to 1907, $1,250. If you buy 20 or more, $1,240. Don't forget, too, we got all kinds of ways to do things here. If you've got an old 401k, an IRA, you want to put some of that into gold, we can help you do that. Precious metals IRAs. Arlene is our expert. She does it. She handles all of our IRAs. She actually has her own private phone number to the people over at Gold Star. But we can help you do that. Don't forget our metals plan. Matter of fact, right now, right, Brittany's been shipping out metals plans all week this week as you get 4 deliveries a year. The minimum's $100. There's no maximum. You can do any amount you want. We got people doing $5,000 a month. We got people doing $100 a month. You get a delivery, a shipment every quarter. Some people at the lower end, you know what? Only give me 2 shipments so I got a little more money because, obviously at $100 a month, you get $300. Getting some gold's kind of hard at the $300 level, but however you want to do it, it's a great program. There's no fees. We don't do the whole fee stuff. There's none of that. You can cancel it at any time. You can change the amount. You can do what you want. But, Jason, there's really outside of, hey, I just don't have the money. We try to make it available for everybody. We understand. Not everyone's got $1,200. Well, look what we just talked about, middle class. You're making $75,000 and most of your income's going to housing. You're broke, right? So, $1,250 is a lot of money for some people, but I'm just telling you right now, get some coverage here. Add to your protection here. As we're in a bubble, boom and bust cycle economy. We know it. The biggest problem now facing the United States, Jason, it's the debt problem. There's no doubt about it, and everybody knows it. And the funny thing is they don't want the Saudi news to be big news, but believe me, ending the petrodollar, which they've done, and now are able to accept pretty much any currency they want, it definitely is going to continue to add to the pressure.
Yeah, they call it de-dollarization, and it's just countries walking away from the purchasing and using of treasuries as an asset. Gold was moved to that tier 1 asset not too long ago, right, Joe? And a lot of countries want to put a little gold in there. We said nobody's buying. When we mean nobody was buying, the retail buying is not as strong as it should be. But if you look at the big whales out there, the countries and the central banks that are gobbling this stuff up, it's always interesting, Joe, to see when the big players are doing something and the average guy either can't do it or won't do it. I'm not saying we should always emulate what the biggest companies and the biggest governments are doing, the central banks. However, they're the ones that never lose, right, Joe? They're the ones, if they're amassing huge amounts of gold, then what are you waiting for, or why are you not following good advice, which is to protect your nest egg, right, Joe? Always protect your nest egg. Have it somewhere where it's going to be protected from this inflation, which is, in my estimation, never going away with the type of government we have in place.
Absolutely. 800-951-0592. Jason and I were coming right back with the half-empty cup. Stay with us.